Here at the World Economic Forum in the Swiss Alps, world leaders convening to imagine a path forward in today's geopolitical and economic climate. Joining us right now with his vision for what he's seeing, Ray Dalio, founder of one of the world's largest hedge funds, Bridgewater Associates, and it's great to see you on day one here. We always talk about crises, and there are a lot of crises and a lot of folks who are involved in crises that are here, if you will. The president of Israel is going to be getting here, I believe, on Wednesday. President Zelensky, who I think you saw this morning, is here. We have Anthony Blinken, who's here trying to sort through some of these things. And the premier of China is here. And there are all of these sort of various cross currents that are taking place. And I'm curious how you think that is going to weigh. And I've been reading you on LinkedIn now because you've been writing lots about what happens in the midst of these geopolitical crises, but how to think about the economy in that context.
Well, I think, as you know, I think there are five major forces that repeated through history, and those are the debt money economic force, the internal conflict force, which is the big conflict in terms of the elections and so on, the external geopolitical force, which is the struggle for the control of the world order, the climate issue. Throughout history, climate has killed more people than anything, and Lord knows it's bigger force now. And then, of course, technology. And so we have all of these forces coming together in 2024. So if we look at them individually and you put them together, they each affect each other, right? The presidential election and will affect the markets, and then the markets will also affect the amount of money that we're spending on wars will have an effect, and they are all coming together. I think that 24 will be a pivotal year because when we meet next year at this time, we will be able to look back on particularly the internal conflict force and particularly the geopolitical force.
Okay, so historically,
see if that's
historically, when there's lots of uncertainty, it's usually actually the best time to buy.
Well, it depends. So I think it's more complicated than that. I think the markets, mostly for the Magnificent Seven, you can't look at the markets as a whole, right? You have to look at the pieces. And then you have to look at different countries. And so the pricing, as we had the move down to 4% bond yields, and then you have the movement in equities, particularly those countries, those companies, that they're no longer as cheap as they were before, right? So I think, let's say we start with a bond yield, start with an inflation rate, then add in a real rate. I think that the inflation rate is in the vicinity, and likely to be in the vicinity of 3.5%. We have to start with that. Then you have to add in a real yield, which is between 1% and 2%. So we're talking about something when you get to a 4% bond yield, that's no longer a really attractive rate. And then if you go beyond the bond yield and you say the bond yield, of course, affects everything. And it's also going to affect what the economy is going to be like this year, right? Because we have to roll over debts and at higher interest rates and so on. So I think if you look at that particular thing, by any measures, it's not it's not cheap. Okay, none of the markets are cheap. Okay, so the pricing here we are is different than the environment. You can't just look at the environment. Then you look at what is priced into a market. Right. So if we're looking at the politics, the geopolitics, I don't think that those risks are priced in because it's a difficult thing to play for a market participant. How do you deal with that? And so that uncertainty isn't priced in. Neither is the geopolitical. Maybe if you go to China, the prices are priced in because of the circumstances.
Okay, let me ask you then the political ramifications on the market. If President Biden wins a second term, good for the market, bad for the market. If former President Trump wins a second term, good for the market, bad for the market.
I think they're both threatening for the markets.
Both are threatening for the markets.
Okay. So there's no alternative, but it's a bad outcome.
Which is the better of the bad alternatives, if that's the case?
Let me say why, okay? Our big worry, I think, our biggest worry, is whether we're going to accept, whether both sides will accept the circumstances, not just the election, whether they will go with the election, but whether they will accept the decisions. Even today, we deal with the question of, does the Supreme Court rule? Is there an acceptance of those differences? Will each live the lives that the others want them to live? And we're coming into an environment where even politics is made as a political weapon, so that we're now having fights. So even if you take the extreme left and the extreme right are at risk. If we take Biden, he will not be president likely. I mean, most people will think that he may not be the strong president throughout his term. Then we're dealing with another part of the Democratic Party, and then the same.
You mean Kamala Harris?
You're saying Kamala Harris,
and a more. There is a great conflict between the left and the right,
and you're putting her in a more progressive camp.
Then that would be more progressive, and I think that you would see a more progressive Democratic Party. Okay. So now you have a more progressive Democratic Party, and you have a more progressive. Conservative, nationalistic party in which the political fight itself is an important thing. So the question is how we get through this in a way where we have sensible governance, or do we have irreconcilable differences over many things? Living standards, it's not just money, although taxes will enter into it. So the taxes that will come out of this, protectionism that comes out of it, nationalism, support for other countries, all of that will be different, but also it has to do with even how you raise your children in terms of these types of balances.
Ray, just boil that down to an investor's point of view. If we're at higher risks for the market, no matter what happens, if either of those two candidates win, and you don't like the payment you're getting for U.S. Treasuries, what do you do?
I think the question is, do you know what your neutral position is? Like I find that the markets right now are not either super attractive or super unattractive, generally speaking, aside from the politics. And so you're going to come into this environment where there's going to be greater risk, particularly taking that factor and the world factor, right? And so then what is your neutral position? I have a neutral portfolio, okay? My neutral portfolio is a diversified portfolio that I won't take the time to get into, but you go closer to your neutral portfolio, right?
Let me ask you another question.
A neutral portfolio doesn't emphasize cash. Is always, people think you go closer to cash. That's not right, because cash is a trashy investment over a long period of time. But what is balance? How do you balance that portfolio? You go to neutral. You should know what your neutral portfolio is and go closer to that.